Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
The show is brought to you by Miles Franklin. When it comes to protecting your wealth, you know there's nothing better than gold and silver. And when I want gold and silver, I go to Miles Franklin because they've been around 22 years, and when you buy, they ship. For more information, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. 1490 WGCH, this is Carrie Lutz, and you're listening to the Financial Survival Network. So, more on the precious metals smashdown. I've got David Morgan on the line. We're talking about QE3. Where is it when you need it? David, welcome. How are you?
Carrie, I'm doing well. Thank you.
Me too, but the metals aren't. What's going on here?
Well, as you said, the metals have been smashed here the last couple of days. We're doing this interview on the 4th of April, and gold's lost $75. We're mid-session right now, so it could change, but $75 in the last couple of days, it's getting near the $1,600 level, which, as you know, as a member to the upgraded service, Carrie, that I stated that I thought the 1,600 level is pretty critical for gold to hold, and 31 level for silver, and we're down around that level for silver as well. Both the metals, all the metals, the platinum and palladium as well, are really getting hit hard here the last couple of days. I think part of it is an overreaction to the Fed stance that they're really not going to do any monetary easing for a while. I'm not sure that that's very accurate longer term, but it's interesting to me that the market seems to be so dependent upon monetary policy in the short term, when the monetary policy has degraded the whole financial system to a level that we are now at, regardless of QE3 in the future, that is beyond repair. So in other words, it's like the score in a football game is 100 to 3, and yet with 2 minutes left, there's some hope that this other team can do something and make the score better or ease the pain or something. It really has no validity in my view, but yet the market is reacting again, I think, on a short-term basis. And I want to be clear, Carrie, because you get my updates. I think the short-term basis means more than a few more days. I think we're going to see a wide trading range through probably September of this year. And we could have to build a base under the $1,600 level for gold and under the $31 level for silver. I don't see that yet, but I've always said the markets are smarter than anyone, regardless of what the fundamentals say. Markets are markets, and so I just have to wait and see more data. But I'm not surprised to see these markets at this level. As you know, I did an update last night and explained to our members that I felt that $31 level for silver is probably going to be tested, and again that gold wasn't looking that strong either. Just be careful, because a lot of my peers and associates and friends in this industry and others have stated, the bottom's in, this is it, you can jump back in or whatever. I'm a bit more cautious than that. Again, I think we have some tough slogging ahead.
Yeah, I agree with you there too, but I saw as of last week, this was going to happen because, look, this is a slow trading week. We're talking about the holiday week. And also the employment numbers coming out, which the employment numbers always make the market ripe for a smash down, no matter what the numbers say. And at this point, I don't think anybody believes those employment numbers anymore anyway, like any other statistic from the government. So if there's the least bit of weakness being shown in any of these metal markets, the algorithms kick in and drag it down as low as it can go. And then real buying jumps in, and that's probably what's going to happen here, right?
I think so. It remains to be seen, obviously. But I've said, we're going to see a good possibility that silver under the $30 level, and I don't know the exact point where you could see someone like an Eric Sprott with the PSLV, or perhaps Stephen Spicer with Central Fund of Canada, or any of the other holding companies or ETFs start to accumulate metal at that level or somewhere in that range. And also you have to factor in industry as well. I mean, people that use it, the silver users, they aren't stupid. They know that, silver can only get so low, and it's an opportunity for them to either, buy physical and hedge it in the, paper markets or whatever. So we've already seen silver test the 26 level, not 26 precisely, but the low 26s. And it's been there on a spike, and it's been very, very brief. And that looks like a double bottom to me. Not that we couldn't see that price again, but if we did, I don't think it lasts very long at all. So I'm pretty confident that even under 30, it wouldn't stay there very long. But again, time will tell. The real key is, as you asked, will somebody come in at those levels and buy more physical? I believe the answer is definitely yes, but we'll have to wait and see.
Yeah, and that's something that you have particular knowledge about because you have close contacts within the mining industry and in the market. So the people you're talking to, demand is still peak, right? The mines are running at virtual capacity. There's no surplus metal on the market to speak of, is there?
Well, it's a two-part answer. Basically, if you looked at all silver mining, which means, primary silver producers and base metal miners that produce a great deal of silver as a byproduct, and you added up all that silver on an annual basis, it would not meet the total demand. Yet, there's actually a quote-unquote surplus. And the reason for that is there's a great deal of silver that's recycled every year. There's a great deal of silver that isn't recycled every year. But there is a great deal that is recycled. So if you add the mining and the recycling, it's actually greater than the total demand, which means industrial demand and monetary demand. And that's been the case since about 2006. So there's a lot of confusion around this point. I try to make it clear. I've done several videos that you can watch on YouTube that actually shows you the charts and makes it pretty much very clear that if you factor in mining and recycling, that total, which is the total silver supply every year, I mean, let's face the facts.
That's it.
That number is greater than the total demand presently.
Right. So I remember watching that video. I know that the theoretical supply is higher, and yet you have record Silver Eagle sales by the U.S. Mint and the Canadian Mint. And in North America, at least, production is under the demand for the coins. And it's going to be interesting to see how this thing equalizes, because I just don't see a lot of investment holders actually selling off their physical metal here.
Sure. Exactly. The point is that all markets move at the margin. There's a great deal of investment silver out there. Most of the holders are strong hands, and they're not going to sell in the market, even at 35 or whatever. They'll probably add to their positions on dips. And because of that, you have a tight market, as you suggested. Of course, there's always somebody willing to sell at some price. That's what moves the market, obviously. So I'm still very bullish. I did a 10-year study in early 2000, and I need to update that. There's been a few things that changed. The solar industry doesn't look as robust as it was forecast to be a couple of years ago, but it's still rather robust. The investment demand numbers that I used in that study were pretty conservative. I used 100 million ounces of demand, and that's coin demand and industrial bar demand. So in other words, ETF demand total plus basically your retail investor demand. I think that's a little too low, but I wanted to be low. I wanted it to be, something that I could pretty much project out for a decade. Regardless, silver is where it is right now. I don't think it's going to be this way all year long, but it's been this way since the peak at 48, roughly 11 months ago. So we've had almost a year where people that got in at 35, 36, all the way up to 48 are unhappy right now, especially if they were leveraged. Those people are probably out of the market, but people that bought physical above 36 or so and are still holding are probably frustrated because in today's world, a year seems like an eternity. although on an investment time frame, it really is not. But, nonetheless, they're sitting on a paper loss right now.
But you think stay the course and eventually it's going to go the investor's way?
I do. I mean, to quote Doug Casey, and this isn't an exact quote, but the idea is very clear. It's kind of hard to recommend gold at, 1,600 and silver at 35, knowing that, we were pounding the table when silver was 5 or less and gold was, under 300. But, it's been a bull market for 12 years, and I don't think it's over yet. But is it as good a bargain as it was then? The answer is no, of course not. But where are you going to go? I'm not going to recommend, real estate. Not at this level. I think real estate market still has a lot of problems ahead. There's always some issues in the stock market on an individual basis that makes sense, but I don't have the time to really study them. I think the energy sector should be held by most investors, but again, it's not my expertise. Anything to do with food and water, I think, is also probably a good place to be investment-wise. But, I specialize primarily in the macro picture on money, mining, and metals, and that's where I spend almost all of my time, as you know. But there are other areas, I think, that are important to invest in. It's just, again, not my expertise. It's not what I write about because I don't want to fail any of my members, putting something out that isn't well-researched or something I feel very confident about knowledge-wise.
Yeah, that's important. For our purposes, the longer this goes on, the better the fundamentals of the metals appear. Just have to ride out these dips, these smash downs. They happen at the worst possible time psychologically, and that's a lot of their purpose. So anyway, David, thanks for taking time out from your busy day and joining us to give us an update on this smash down. silver-investor.com, and we will talk to you soon.
Thank you, Kerry. My pleasure.